Welcome to Bears in Exile. Today is September 22nd, and it is time for the market overview. And I'm just going to go right into it. And I apologize for the video being so late tonight. I had posted in the daily running thread that I would be going out to the state fair today, and so that is why the video is so late. Had a good time, and also had a great time in the market today. It was fantastic. Down 391 points. Would have been much greater if we didn't have a rally at the end of the day, but it was great. Almost actually over 500 points at its worst. And we were expecting a move down. This was a fantastic move down. What do we have to look for? Well, some people are going to say, okay, this is overdone. We have a double bottom, the shadow reaching the other shadow. We're below the lower Bollinger Band. This is overdone. I disagree. Certainly, that is reason for a move to the side or a small up to get back inside the lower Bollinger Band. But we have the short-term moving averages completing their crossover and getting separation. That is extremely bearish. This is, of course, a failed bar retest, and we're going to have to go down, get an uptick, and then go up for another test of the bar, and we are nowhere near that as of yet. Beyond that, we have the 14-day RSI moving average hooking over, and this doesn't turn on a dime, so it has all kinds of room to move on the downside, which tells me that the down move is not over. We also have the stochastics pointing down with room to move before they get too oversold, so there's room to move on the downside. All of our secondaries clicking down, and everything up here looking bearish. I'm going to say that the daily and the 180 minute both look very, very bearish, and I'll show these to you. That way I won't go over them in every symbol, but just to give illustration, here's the 180. Look at the 14-day RSI moving average. It's ticking down, and it has the whole range to cover. Yes, the stochastics are very low, and they're starting to hook up. But the 60-minute, the 30-minute, the 15-minute, and the 5-minute are all oversold with the 14-day RSI moving average with the stochastics. So their need for a move up will heal this Bollinger Band issue. And once they are reset, this stochastic is going to be up here with the 14-day RSI moving average ready to click down with it. So I don't believe that the move down is completed at all. And just to give an illustration, in the 60-minute time frame, you can see that the 14-day RSI moving average is low, the stochastics are starting to click up, and the histogram is starting to slope up. And you can see that the rally at the end of the day, which really saved the bacon of the bulls to a great extent, probably giving them a false sense that now is the time to bounce. Here's the 30-minute 14-day RSI moving average very low, stochastic starting to click up, MACD sloping up. 15-minute RSI 14-day moving average already on the move, on the way up, along with the stochastics and the MACD. And of course the 5-minute, it's actually everything's starting to get high again. It still has a little room to move, but just to illustrate, because all the time periods for all of the charts are essentially the same. So there's my thesis about that. Now, why also do I think that we have more down? Well, beyond the indicators, beyond the candle, which is a continuation candle, why should we go lower? Well, risk has increased. The market needs to be repriced for the new information which is out, which indicates slowing growth, lower profits, and and of course increased risk. So actually some of the other charts illustrate this better, so I will continue that thought in a few other charts. Going on to the SPX, not quite as bearish as the Dow, not as much damage made. We did not close below the lower price consensus level. We did not exceed the previous shadow of the previous low, but it was still a nice move. It is also below the lower Bollinger Band. All the secondaries are the same. 14-day RSI moving average, the most important thing, clicking down, sloping over. And now to continue that, actually the VIX. VIX ended with a spinning top above the upper Bollinger Band. We did not meet the upper price consensus level. However, the upper shadow did exceed the shadow of the previous peak, actually the second peak over, which was great. And if we're able to get a real body close below the upper price consensus level, we're definitely in for some movement. We have separation of the short-term moving averages, which would be a bullish guppy entry. If we have a side tick or even a small down tick tomorrow, we'll get further separation confirming the move, and this looks great. 14-day RSI moving average getting the hook and turning up, along with the stochastics, of course, and getting the bullish cross on the MACD histogram. Look at all this room we have to move. On the RSI 14-day moving average, on the MACD, plenty of room to move. So that's fantastic. And I don't know if I covered that on the SPX, but look, bearish cross on the MACD, downtick on the histogram. We have all this room to cover. 14-day RSI moving average, all this room to cover. So once the 5, 15, 30, 60 minute time frames reset, we have everything in alignment for a bearish move. That's confirmed by the VIX. And now for continued evidence of that chain of thought, TNA closed below the lower Bollinger Band. We're getting the cross of the middle Bollinger Band. We have all the short-term moving averages pointing down, closed below the lower price consensus level, spinning top, lots of room to move in the 14-day RSI moving average to the downside, almost at the cross of the MACD, histogram ticking down, all that room to move. Now here's the important thing, here's the tell. We left this little range today, finally. We made a lower low. So this is broken now, and it's bearish. So if TNA is going to be the leader once again, it just sent us a big signal. Of course, all the secondaries clicking down. Got a side tick on the RSI, but everything except for that clicking down does not look good. UUP spinning. Actually, Doji Star above the upper Bollinger Band. Look at that separation of the short-term moving averages. Notice it is uniform. We may have a little bit of wobble, but we don't have anything really that just screams, correct me. Yes, we need a side tick or a slight down tick or whatever, but even with that, we should still have all the short-term moving averages pointing up. We are well above the 200-day moving average. Certainly the 14-day RSI moving average is high, along with the stochastics, along with essentially everything else. But this is good. And now as soon as we get a downtick, as soon as there's a problem that is evident, that could be a nice little pop for the bulls, but we don't have any evidence of that yet. But we should expect a side tick to slight down tick, or even just a regular down tick tomorrow, and that should give a lot of people a really false sense of security that all of a sudden we're at the bottom. But we are repricing the market. That's what this is all about. So I think it's going to catch a lot of people really bad. FXE, spinning top. Notice it is not below the lower Bollinger Band. Look at the short-term moving averages. Very uniform, clean, and we don't have excessive separation. It kind of looks like that, but it's because the middle Bollinger Band is on top of one of the short-term moving averages and obscuring it. 14-day RSI moving average, we're going to be watching to see when we get the hook, and that will be very important. And if it gets stuck down here, which it can, this will continue to move down. And gold, this was very unfortunate. Spinning top below the lower Bollinger Band. We broke the major price consensus level, which we were hoping would hold it, but it did kiss the lower price consensus level today and bounced off of it. All of our secondaries still clicking down, which they have been for a while now. We've been watching that. Just wasn't able to hold it. And notice that it cheated too. It was just a big gap. It did not fight with the upper price consensus level, but it is what it is. And unfortunately, silver was much worse. We thought that it would stay in the long-term bullish bar and work on collapsing it, forming a double flat line. It did not do that. It gapped the major price consensus level, the lower price consensus level, and busted the 200-day moving average today. We do have a major price consensus level from 2 months ago, which did catch it and hold it. The further you go out from price consensus levels, the weaker they get, but this one actually did hold it. I'm very curious to see if this is going to be able to get back above its 200-day moving average and try to repair itself. But wow, that really stinks. Just like gold, all the secondaries still clicking down. And you know what? I'm going to go over our price potentials really quick. Black box number 1. Here's the Dow. We broke the minor trend today, which is normal in a normal market. You're bouncing within a price trend, and but when something changes, you leave it. And so now we're going to be looking to see if this leaves and forces it to change. We have the extreme sloping down, the major sloping down, and if we go down to test the extreme and the major, we're looking at 10K 100 right now, and that is, we've been expecting that for a while, and now we have a shot at it after we get the realignment of the intraday time frames to match the 180 and the daily. SPX, we are still within the minor trend, and going down to challenge the lower part of it is 1100. And if we break that, if the repricing of the market continues forward as it should, and we break the previous floor, we're looking at 1050 and 1040. Now the VIX is kind of interesting in that it is right at the top of the minor and just above the major, but the extreme is pricing in a move up to 80 if the market were to fall apart. Now that is absolutely insane. I don't know how it could possibly get up to 80, but that's what it's saying. And so certainly it should have some problems right here, but if it busts it and goes up, these are going to shift, and I'm going to be watching for that. That's extremely interesting to me. I guess if you have a total euro collapse, you could get up to 80 or something like that, but that's just beyond reason at the moment. TNA, okay, now into some better stuff. We have left that whole little block of consolidation, and we are approaching the lower of the minor trend at 30, and if we bust out of that, we could hit the lows down here at 1750 and 15. So there you have it. There is the overview looking at our potentials, and I am expecting some sort of a little pop to sucker people back in, but I do believe it will be short-lived, and we will continue on the way down as the market is repriced. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.